Hello, good day to you. Welcome to this live session. My name is Ernest Okwebo. I'm the managing partner OEA Accounting Services. We are small business accountants, providing bookkeeping and accounting services to small business, advising on structure and helping small businesses to do better generally. Welcome to this live session. I'm going to be sharing with you in this session, but just answering a simple question, which is, should you do your bookkeeping on your own? Should you do your bookkeeping on your own? Should you do your bookkeeping by yourself? Let's begin by telling ourselves what bookkeeping really is. Bookkeeping is simply the recording of business transactions, the process by which you document financial transactions of your business is what we refer to as bookkeeping. Bookkeeping is systematic, that is to say, it follows a prescribed procedure. It has a process by which you do it. Before we answer that question, whether this is something that you can do by yourself, if you run a small business, let's begin by looking at what are the records that you need to keep. What are the records you need to keep as a small business owner? First of all, the law requires, in whichever country you are, I'm in Nigeria right now, the law requires that every small business must keep, whether small or big, every business must keep a record of its transactions in the business location. Every director in a business must ensure that that business keep records of its transaction. It's a provision of the law, and there are penalties for failure to comply, for failure on the part of any director to make sure that that business keeps its record. Now, if this is a required responsibility as far as the law is concerned of the directors to keep the records of their business transaction. Does that suggest therefore that they must do it by themselves? We will come to that. What are the records that these directors are required to keep? Number one, the director is required to keep a journal of all financial transactions that takes place within that business. The journal is just a list of transactions as it occurs within the business. Now, certain information is required regarding any transaction. Number one, the date of the transaction, a description of the transaction. You must state the accounts that are impacted by that transaction, that is the account to debit and the account to credit. Then you must state the amount involved in that transaction. And you must also state a reference number for that. Depending on the type of transaction, it can be an invoice number, can be a receipt number, it can be a check number, can be a purchase invoice, a purchase order number, just a reference to signify if I want to trace that transaction, I should be able to have something that I can use to trace it. So first record that you must keep within a business is what we call the journal record, a listing of daily transactions as they occur. Second is what we call the ledger book. The ledger book, or what is generally called the general ledger. That is the name that we refer mostly to it in accounting. the general ledger. The general ledger is just a summary of all the transactions that you have recorded in the journal. You now summarize them, categorize them into what we call the general ledger. The general ledger is divided into, again, two parts, the debit and the credit side. Remember that in recording the journal, you have indicated what account to debit and what account to credit. So you move those transactions like that and summarize it into what we call the general ledger. It contains your list of accounts, the chart of accounts, which is just a listing of the regular transactions that takes place within your business. The third record that you must keep as a business is your cash receipt book. You must keep a record of all monies that come into your business. You must keep a record of the inflow. Business is established to provide goods and services, meet needs, and in exchange for that, you receive money. You must have a book referred to as a cash receipt book, where you put down details of all monies that come into your business. Again, like the journal, this book must have a record of the account to debit and the account to credit, the account that is receiving value and the account that is giving value. It must have a date. Then you must have a reference number and, of course, a description of that expense. This must be recorded in your cash receipt ledger or cash receipt book. The fourth is your cash disbursement book. It is expected that as money flows into your business, it also finds its way out, either to buy goods, also you buy services, you are paying bills, you are paying for services that other people are rendering to you. So you are also expected to document in detail every outflow of cash from your business. Just like the cash receipt book, your cash disbursement book must also have, obviously, accounts that are impacted by that transaction. If you pay out money, money have left your bank. If you paid it for transport, your transport account have received. So those two accounts are impacted by that single transaction of paying for Uber or any other means of transport to carry out your business. If you pay salaries, of course, you will take money from your bank to pay salaries, so your bank has given out value, and salary account will have received that equivalent value. So account to debit and account to credit. There must be a date, there must be a reference number, a description also of that transaction where you will clearly state that this money was used to salaries. The fifth is what we call the subsidiary sales journal. When you invoice customers, whether or not they have paid, you must document it in a sales journal. This is irrespective of whether or not you have received money for that sales. All cash and credit sales must be recorded in this, and like every other transaction again, all the necessary parameter, all the necessary ingredient for a complete transaction to be recorded must be included, which is your date, your reference number, your description, and of course the name of the customer that is receiving the service from you or that you are invoicing, and of course the amount of that transaction. The fifth is, okay, the fifth was that sales journal, and of course the sixth is your purchase journal. which is a record of the goods and services that you are buying. When we use the word purchase in accounts, we are actually referring to you giving out money for goods or service that you intend to resell, not the one that you consume, where you are the final consumer. No, but when you buy those items or those services and you intend to resell it, we refer to it as a purchase. So you should have a record of that transaction. So these are the 6 books that you must maintain in your business. Now, back to the question really. Should you be maintaining these books on your own? The question, at a point in time in your business, you will need to ask yourself this question and answer it. When you start out in business, chances are that you will not have enough transactions that will justify hiring an accountant to do your books for you. Second is you may not be able to afford one. And so the question whether you should keep your books by yourself will not even arise at that beginning, looking at the scale at which you are starting your business. So somewhere down the line, as your business begins to grow, then this question will now arise, and you must answer it sincerely. You must answer it whether it makes sense for you to spend time doing your books, whether your time is better spent working on your business. Administrative work, including bookkeeping, is equal to working in your business. But a time comes when, as a business owner, you need to go beyond working in it to working on it, making strategic decisions and making better use of your time so that you can grow your business. Activities that grow your business are not really the administrative ones of bookkeeping, for example. If you are not an accounting firm, you are not running an accounting firm, why should you be spending your time keeping your books? The questions to ask will be: number 1, how much is it costing you to maintain these books by yourself? How much is it costing you? Or you say, it's not costing me anything since I'm doing it by myself. So you must look at it and say, will I have had a better use of this time between in and on in terms of your work, as far as your business is concerned, working in your business and working on your business? Will I have had better thing to do with my time? What would have been the value, or what would be the value of that thing that you are spending your time to do? And so you need to answer that question. Now, another question you will need to answer is, do I have the time? Do I have the time to do these books? Bookkeeping, I said before, is a systematic recording of business transactions. That means that it follows a process. It's not just an haphazard job. It's not something you do anyhow. So, do you have the time? For a small business, no matter the size, you require between 3 to 5 hours every week to put your books in order. Can you afford that time? Do you have the time to do that? Coupled with the risk involved in you maintaining those books by yourself. One of such risks is the fact that you may mess up your books. Prevention is better than cure. When your books are not properly kept, it takes a lot more to put them right than it would have taken to do the thing right from the beginning. So you may consider whether you have the expertise to do this, or it is better that somebody else is doing that for you. Your failure to keep accurate and proper books cost you a lot more than the saving in terms of what you would have paid an accountant or a bookkeeper as a staff, or what you would have paid to an outsourced consultant to keep your books for you. And some of those costs will come in the area of lost opportunity. Many a times we see businesses who have opportunity of getting a job from somewhere, and the only condition they gave them is bring your financial statements, and they don't have it, and they miss that opportunity. It may even be that you want to borrow money from the bank, and they will require your financial statement. If you don't have it, you have also missed that opportunity. Like I said before, it takes time, it costs time. It takes time to keep proper books of account. Can you afford it? As I begin to round up, I bring you a quote from Peter Drucker, a management, a widely recognized management expert in his days and even up to now. He simply said, "You cannot manage what you cannot measure." Your responsibility as a business owner is to manage and grow your business. Peter Drucker says, "You cannot manage what you cannot measure." Accounting is the means by which you measure your business performance. It starts with accurate record keeping. If you want to manage your business better, you want to grow that business, then you need to be able to measure where you are now, how you are doing, and you can now begin to talk of the next step, which is managing. I want to thank you very much for listening. And if this has been of benefit to you, I encourage you to share it to your friends. And of course, like this page. My name is Ernest Webo, Chartered Accountant and Small Business Accountant. I provide bookkeeping service and general business structure and system setup, specializing in helping small businesses grow and do better. Thank you for listening.